If you're watching this video, you might be wondering why you're still struggling with money despite your best efforts. Don't worry, you're not alone. In today's video titled, "These Money Habits That Are Keeping You Broke, Accountant Tells All," I'm going to walk you through the bad money habits that could be holding you back from building wealth. Stick around until the end, because you might be surprised to find that one of these habits is seriously preventing you from becoming financially free. So, give Luxo-Life some love and let's get started. 5 is paying yourself last. Number 5 is paying yourself last. And it's a trap that many of us fall into without realizing. It's easy to get caught up in paying bills, covering expenses, or treating yourself to something nice, and before you know it, there's nothing left for saving or investing. You might think left for saving or investing. You might think, I'll save what's left at the end of the month. But the truth is, that leftover amount is often zero. This habit makes it nearly impossible to build long-term wealth because there's no plan in place to secure your financial future. So why is this harmful? Well, if you keep paying everyone else first, you'll always find an excuse not to prioritize your own financial growth. When you put off saving or investing until after all the bills are paid, there's a good chance you'll never get around to it. Long-term wealth building isn't about just getting by from paycheck to paycheck. It's about actively setting money aside for your future. But if there's nothing left over, that's a hard goal to reach. What you should do instead is pay yourself first. This means as soon as your income hits your account, take a portion of it and put it into savings or investments. Think of it as a non-negotiable expense. Your future self deserves it. Setting up an automatic transfer can help make this process seamless and stress-free, so you're not left relying on willpower to save. By doing this, you ensure that your financial future is prioritized and you're building the foundation for financial freedom over time. 4. Getting comfortable with bad debt. Number 4 is getting comfortable with bad debt, and it's a habit that keeps a lot of people from building wealth. Bad debt usually refers to high-interest debt like credit card balances, payday loans, or other types of borrowing where the interest rate is sky-high. The issue is that many people let this debt sit around without addressing it, thinking it's just part of life. But the longer you carry it, the more you end up paying in interest, which just drains your money and holds you back from achieving financial freedom. Why is this harmful? Well, bad debt doesn't just cost you money in the form of interest. It also prevents you from saving or investing. Every dollar that goes toward paying off high-interest debt is a dollar you can't use to grow your wealth. Over time, this adds up and keeps you stuck in a cycle where you're always playing catch-up instead of moving forward financially. The longer you let bad debt linger, the harder it becomes to break free. So, what should you do instead? First and foremost, avoid accumulating bad debt in the first place. If you're tempted to make a purchase, ask yourself, can I afford this without putting it on credit? If you already have bad debt, don't ignore it. There are strategies that can help you pay it off quicker, like the debt snowball or debt avalanche methods. The debt snowball has you start with the smallest debt and pay it off first, giving you a sense of accomplishment. The debt avalanche method focuses on paying off the highest interest debt first, which saves you more money in the long run. 3. Not knowing your income or expenses. Number 3 is not knowing your income or expenses, and it's a habit that many people overlook. When you don't track how much money you're bringing in or where it's going, it's easy to overspend without even realizing it. This can happen when you simply don't have a clear picture of your financial situation. Maybe you're paying bills here and there, or buying things on impulse, but you're not actually tracking how much it's all adding up. over time. This can lead to some serious money mismanagement. Why is this harmful? Without tracking your income and expenses, it becomes nearly impossible to make smart financial decisions. You won't know if you're spending too much on unnecessary things or if there's room to save or invest more. This lack of awareness can lead to debt, missed savings opportunities, and stress because you feel like your money is slipping through your fingers. Essentially, if you don't know where your money is going, you're not in control of it. What should you do instead? Start by budgeting and tracking every penny. You don't need to go overboard, but having a clear record of your income and where you're spending it will make a huge difference. Whether you use budgeting apps, a simple spreadsheet, or even pen and paper, the key is to know your numbers. By tracking your cash flow, you can spot areas where you're overspending and make adjustments to stay within your means. 2. Having expensive hobbies. Number 2 is having expensive hobbies, and it's a habit that can really hold you back financially. Hobbies are meant to be enjoyable, but when they start costing you a lot of money, it can be a different story. Whether it's buying high-end gear, attending expensive events, or traveling for your hobby, these costs can quickly add up. The problem is, if these hobbies don't align with your financial goals, they're just draining your money without giving you anything in return. Financially speaking, why is this harmful? Expensive hobbies can eat up a big chunk of your budget, leaving little room for things that actually help you build wealth like saving or investing. If you're spending hundreds or even thousands of dollars on your hobbies every year, it means there's less cash available for things like emergency savings, retirement accounts, or even opportunities to grow your income. Over time, this can keep you from achieving the financial freedom you're working toward. So, what should you do instead? Start by finding ways to enjoy your hobbies at a lower cost. For example, if you love a hobby that requires expensive gear, look for secondhand options or borrow equipment from a friend. Or consider hobbies that don't have a heavy financial burden. Things like reading, writing, hiking, or learning new skills can be fulfilling without breaking the bank. You could even shift your focus to hobbies that have a more favorable financial impact, like investing in skills that could lead to higher income or setting up passive income opportunities. 1. Constantly being bombarded by marketing messages, and our number 1 is constantly being bombarded by marketing messages. Everywhere you look, there's an ad telling you that you need the latest gadget, trendy clothes, or special deal that you can't miss. Marketers are masters at creating a sense of urgency and making you feel like you're missing out if you don't act now. It's easy to get caught up in the excitement and make impulse buys, even if the item isn't something you really need. Why is this harmful? These impulse purchases, while small at first, can quickly add up and derail your financial goals. You might think, it's just a coffee maker, or it's only $20. But those little purchases can become a habit, and before you know it, you're spending money on things that don't move you closer to your financial independence. Every dollar spent on something unnecessary is a dollar you can't save or invest for your future. So, what should you do instead? The first step is to recognize marketing tactics for what they are. Understand that advertisers are trying to create a need for something you may not even want or need. Start making conscious purchasing decisions and ask yourself if the item is something that will truly improve your life or if it's just a fleeting desire. One helpful strategy is to create a needs versus wants list and stick to it. By prioritizing what's truly important, you can avoid getting swept up in the cycle of unnecessary spending. How to avoid these habits? Of course, we don't want to leave you hanging by just showing the bad habits. We want you to avoid them as well. So, let's talk about how you can break free from these financial traps. First, it's important to focus on long-term financial goals. Building wealth isn't about getting rich quick. It's about making steady, consistent progress over time. Instead of chasing quick wins or trying to make fast money, focus on creating a solid plan that will grow your wealth in a sustainable way. Small, everyday habits like saving a portion of your income, investing for the long haul, and avoiding unnecessary debt can add up to significant financial success over time. Next, make sure you're paying attention to taxes. Taxes can have a big impact on your wealth-building efforts, and it's important to understand how they work. Many people overlook tax planning, which can lead to paying more than necessary. By learning about tax rules, you can make smarter decisions that save you money in the long run. Whether it's contributing to tax-advantaged accounts like IRAs or 401ks, or understanding deductions and credits that apply to you, knowing the ins and outs of taxes helps you keep more of your hard-earned money. Another key step is to build multiple income streams. Relying on just one source of income can be risky, especially when life throws unexpected challenges your way. Diversifying your income by exploring side hustles, investments, or passive income opportunities gives you more financial security and flexibility. Whether it's starting a side business, renting out property, or investing in stocks or bonds, having more than one way to make money helps you stay on track, even when one income source slows down. And that's a wrap. Today, we covered common money habits like paying yourself last, carrying bad debts, and overspending on hobbies that can hold you back from building wealth. The good news is, with some effort and awareness, these habits are changeable. If you found this video helpful, hit the thumbs up, drop a comment on which habits you're working to change, and share it with others. Don't forget to subscribe to Luxo-Life and hit the bell to stay updated. See you next time, Luxo Lover.